Well, things should be improving. The world economy is getting better. The American recovery is picking up a bit of pace, and people are very relaxed about that. There are some signs now that the European euro area is coming out of recession, and the UK recovery is a lot livelier with some very good second quarter figures, and people looking forward to better growth over the balance of the year. The other side of the world, the Chinese have been slowing down a bit, and there are still some fears there about whether the Chinese authorities might overdo it. But overall, it looks as if the Chinese are going to manage their growth rate down to a more acceptable level, and at the same time sort out some of the extremes in their banking and property markets where things got a bit too lively. But the markets haven't been happy in the last 2 or 3 weeks. A couple of things have come together. The worst is that on the back of the Americans rightly saying that they're going to come to the end of printing all this extra money in due course, the markets have taken alarm at it and have started driving interest rates up rather too quickly. The American authorities don't want official interest rates up anytime soon, nor of course do the British or the Europeans, but they've been affected in the wake of the move in the American markets. And as interest rates start to go up, so people panic, and so they say, well then property can't do very well, and they say that emerging market sovereign bonds can't do very well, and they get very worried about how some of the emerging market countries like Turkey and Brazil are going to pay for themselves, because these are countries that need to import money in order to pay for their excess of imports over exports. So the markets have had plenty to worry about financially. On top of that, there have been fears about how far the Americans might go on Syria. So we think the medium-term prospect is still fine, that there is going to be world growth, and that the world authorities don't want to switch off this recovery. But in the short term, there are wobbles, both over interest rate fears and over the Syrian problem.